Today, we're diving deep into SoFi stock performance, reviewing the latest numbers, market dynamics, and what short sellers have been up to. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. As soon as the market opened today, it seemed like SoFi was on the verge of a breakout. It attempted to rally a couple of times, but unfortunately it got dragged down by broader market factors. Over the next few days, we have critical data releases coming, such as GDP and PCE figures, along with initial jobless claims. These elements are creating additional uncertainty and fear in the market. In my pre-market analysis, I mentioned that there could be some selling pressure later in the day, and that's exactly what happened. SoFi saw a range today with a low of $7.71 and a high of $7.88, both of which align with its technical levels. However, trading volume was noticeably low at 25.8 million shares compared to the average of 41.8 million shares. Breaking it down further, let's talk about large trades on the secondary market. There were a few significant transactions above $100,000, with one standing out after hours at 6.93 million shares, which is why the price has edged up slightly post-market. But overall, most of the day's activity leaned towards selling. Institutions continue to offload SoFi stock, indicating cautiousness in the broader financial sector. The low trading volume could be partially attributed to some recent housing data released earlier today. It didn't impact the market much, but did create some minor movements. Meanwhile, market sentiment around the likelihood of a 50 basis point cut has shifted to a 62.3% probability. This percentage will likely fluctuate in response to the upcoming economic data. SoFi did release some corporate news today, announcing that Galileo, a SoFi subsidiary, has launched a secured credit offering aimed at simplifying credit building for consumers. While this move is aligned with SoFi's long-term strategy, it targets lower quality customers and isn't necessarily a reason to buy or sell the stock. It's more of an update on SoFi's evolution as a fintech company rather than just a bank. Looking ahead, we are approaching the end of Q3, which typically sees insider buying activity. If SoFi's CEO Anthony Noto decides to buy more shares, it could serve as a positive sentiment driver. He has already purchased a considerable amount in the past, but with less than a week left in the quarter, it'll be interesting to see if he makes another move. On the short selling front, we saw a modest increase of 8,000 shares in short positions today, breaking a trend where shorts had been returning shares consistently. Currently, 17.32% of SoFi's free float is shorted, which translates to 181.12 million shares. The average cost to borrow these shares sits at 0.75%. Since September 16th, the short interest has been on a downward trend, peaking at 19.56%. So this recent uptick is worth watching. Ideally, if shorts continue to cover leading into SoFi's Q3 earnings report, we might see short interest drop to around 14%, which would be a positive sign. However, it's still too early to tell. When it comes to options trading, today's volume was on the lower side, with 3.57 million in calls and $1.66 million in puts. About 46% of the options activity was bearish, indicating that the market remains uncertain. The call options are mostly clustered around the $8 range, while puts are targeting below 7.50 cents, reflecting a divided outlook. Now, let's look at the open interest levels influencing SoFi's price movements. There are currently 9,000 contracts at $7.50, 31,000 at $8, and 29,000 at $8.50. With SoFi hovering at $7.73, it's positioned above a solid support level at $7.72. However, breaking through $8 may prove challenging due to strong resistance. If SoFi can rally past $8, it could establish a new bullish trend. But if it fails, it might retrace back to $7.50 as we saw a couple of days ago. As it stands, SoFi is slightly above its first support level at $7.72, a critical area to watch over the next few trading sessions, especially with key economic data on the horizon. When examining technical indicators, SoFi's stochastic reading is at 69, signaling that it's still considered overbought, with a bearish deviation, red line above white line, visible. This suggests some downward pressure. Retail investors have been active in buying recently, so if you're part of that group, let us know in the comments how you feel about SoFi's direction. The main catalysts coming up are the GDP report and initial jobless claims. Expectations are set at 3% for GDP on a quarter-over-quarter basis and 224,000 for jobless claims. Positive outcomes could trigger a buying spree, but negative data could pressure SoFi further. Lastly, let's talk about the impact of the broader market on SoFi. A solid reversal in the market could help SoFi recover, even if a 50 basis point cut seems off the table for now. Watch for the 200-day moving average, which SoFi tested recently. In conclusion, SoFi's current technicals show mixed signals. The key is for the stock to maintain its position above the low $7 range. Let me know your thoughts on SoFi's outlook, the upcoming economic data, and if you're buying, selling, or holding. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.